What's up, guys? Welcome to Bitcast episode 5. Gonna talk a little bit about the why of Bitcoin again. Bloomberg came out with this video with a few asset managers that run these big funds that look at Bitcoin as an uncorrelated risk asset that they include in portfolios. They believe in it and they kind of talk about it. So I wanted to reserve a little bit of episode 5 to just hear a couple of these guys talk about Bitcoin, talk about the value proposition, and talk about where they could possibly see Bitcoin going in the future. So I think it's a super important conversation, and hearing guys that manage millions of dollars talk about it and their kind of frameworks around it is super important. So I'm gonna go ahead and play some of this video, like 5 minutes of it.
Risk asset, but it's a risk asset with a specific set of investment characteristics that become increasingly more attractive the more irresponsible monetary and fiscal policy is from central banks and governments globally. And it shouldn't come to us a big surprise that investors and people all around the world are having a hard time kind of getting their head around that, because we haven't really had anything like that before. And we've been using gold to store value for 5,000 years. And before we were using gold, we were using other things. We were using like seashells and salt and these really big heavy rocks. And there's a framework that you put around evaluating potential stores of value. Like there's a reason that gold's gold. And it's an Austrian Economics framework. It's hard versus soft money, sound versus unsound, the 6 characteristics of money: durable, divisible, portable, uniform, accepted, and scarce. And when you line Bitcoin up next to gold within that framework, it actually lines up pretty well. And so, investors in Bitcoin today aren't investing in Bitcoin, I don't think, as a store of value today. We're speculating that it may become a store of value because it has the characteristics to be a good store of value. But if the VIX goes to 35 tomorrow, let me be clear, number go down. So don't get that sort of confused. Now, the morphing from and Bitcoin started its life as a tremendously risk-on asset, like the most far-out science experiment. Imagine paying 3 cents for the first Bitcoin. Like, what's your expected return then, right? And then it's morphed over the last, going on 11 years now, it's gone through all these different sort of identities, right? Like a teenager in junior high. And, at first it was the science experiment that a couple hundred, cypherpunks cared about. And then it was magic internet money for drug dealers that buy drugs on the internet. And then it was about blockchain, not Bitcoin. And then it was about, Americans buying cups of coffee. And then, now it's this sort of digital gold thing. And that morphing and the sort of risk that's associated with it, it's less risky today than it was several years ago. But that morphing is not something we've seen maybe ever in investing before. I've thought about this before. John, I don't know if you have any opinions. One thing that popped in my head was Google stock, where when it first came out, it was like this highly risky, techie, didn't really understand what the internet was, crazy sort of thing. And then it got so big, so dominant, with such a big cash position, that now it's like something. I'm sure there's billions of people around the world that would love to store their value in Google stock if they had the opportunity to, right? So
you see it also as a venture investment at this stage?
in that way, but not one. But the investment characteristics are different than almost anything else that you're going to see because of I would agree with John's framework. It's a venture bet on a store of value, which that's not like other venture bets.
Maybe a way to put that a bit more precisely is you're betting that the base layer store of value for a speculative view on how the structure of the financial system could evolve. So it's like the speculative bit is, what is the market structure going to look like? Is it going to be centralized and too big to fail, or is it going to be atomized and basically have authority distributed into sort of more credible governance across the internet, right? In that world, Bitcoin is the hardest asset, of the sort of self-sovereign attestation / notary public utility, which is what Bitcoin does, i.e. timestamp, transactions and record, in a credible way. Right, Bitcoin is the hardest hard asset in a world that relies on that kind of utility to organize human activity. Whether or not that kind of utility comes to fruition, I think is an open debate. But a self-sovereign, trustless, totally reliable, ultra secure, timestamping utility is a pretty useful piece of software for people to build all kinds of kind of atomized architectures for organizing activity. If you believe that that's a useful piece of architecture in the system, then Bitcoin is basically the fuel for that, right?
So yeah, Bitcoin, like they were saying, it's more of a venture investment into a future store of value. Whenever I talk to people and I tell them it's digital gold, they kind of laugh at me because they see the volatility. One day it can be $10,000. A week later it could be $8,000. So they're like, well, how can that be a store of value? If 20% of it can be gone in a week. Well, it's because it isn't there yet. The market cap is so small. Especially compared to gold. Gold is like an $8 trillion marketplace, whereas Bitcoin is like a $150 billion marketplace right now. So, it is so small relative to other assets globally. So it's so tiny right now, but it has these characteristics like gold, like he was saying. In Austrian Economics, you look at, hard versus soft money. Soft money is fiat currency. It's not hard money. It's always inflating. It's controlled by a central government, so it's at the whims of, a small group of people. It can be confiscated. You don't know if it's, you don't know how the inflation is going to be. You don't know the forecasted inflation. Where Bitcoin, it is such a hard money because it's all code. We know what the supply schedule is going to be. There is no centralized small group of people that can control it or devalue it. We know what the deflational model looks like. And like he was saying, Bitcoin, you invest in Bitcoin as a hedge against irresponsible fiscal and monetary policy. And we're seeing that all over the world. All over the world. Right now there are protests happening in every continent of the world, basically. And they're all protesting, separate things, but the underlying issues are, they're against their government, they're against their central banks, they're losing this trust. I'm actually writing an article about it right now. It's not finished, but it's called The Trust Revolution, and it kind of details all these different places in the world, all these things happening across governments, the media, social media, technology, and just how all of this, kind of correlates, and how something is happening among people around the world where we're losing distrust in the fiat banking system, the way our governments are run, how all of this centralized power in governments, happens, and then it's not good for the people. And we're seeing people lash out all across the world right now. And Bitcoin is a hedge against fiscal and monetary irresponsibility. So really, you got to ask yourself, do you believe in the current fiat money system? And let me remind you, every fiat currency that has ever been created has failed. Every single one of them. It's just a matter of time. You create a system that's too big to fail. All they can do is they can either print more money or they can change interest rates. And the amount of debt that we're accruing, they have to print more money. They have to continue to do quantitative easing. And if you believe that that's sustainable, then you're not going to think Bitcoin is very attractive. You're just going to go buy stocks and believe in your 401k and believe that it's going to be there and we're never going to have a recession and everything's going to be hunky-dory. Well, me personally, I'm betting that that's going to fail, just like it has every single time that a fiat currency has been created. You can look at Venezuela recently, all these other third world countries that got these dictatorships and these leaders that are just printing so much money, and they're just so corrupt and garnishing all of this tax money. And we heard of there's this I can't remember what country it was in Africa, but they supposedly received some money from China, and the report was they received 3.6 billion from China is what this African country was saying, and China was like, no, we actually sent you guys 30 billion. So it was somebody in government just freaking garnished 90% of whatever China gave them. So we see that shit all over the place. Bitcoin is kind of a hedge versus irresponsibility in governments and central banks globally. So that's the value prop. It's an asset. It's obviously a risk asset because it's so small right now. It's very volatile. But if you look at the chart, clearly people are seeing the value. This is just 11 years of price action, and we kind of see how people feel about it. People are looking at it more of a store of value. In the short term, Bitcoin isn't doing so hot. I think the last video I did, we had this big run up, and then we were correcting, and we had this little, what you would call a flag pattern, and Bitcoin has been respecting it, honestly. But it is forming a head and shoulders pattern. This is a shoulder, this is the head, this is another shoulder, and once you break this neckline like it currently has, you could potentially see a drop of the same distance from the top to the neckline. So around 45% drop would put us somewhere around the top of this whole fractal down here, which it's not out of the question. It could drop that long. This could just be some blow off. A lot of people like to tie big moves to news. There's been a lot of FUD coming from China, and they're like, oh yeah, they tie it to the news. I'm more of the belief where I look at the technicals. I think it's just supply is not meeting demand, or demand's not meeting supply, so price goes up or down. That's why I fell in love with technical analysis, because it kind of blocks out all that stuff. I'm not saying you shouldn't pay attention to macro narratives, but I think there's been so many of them happened, and price hasn't done much. To just tie certain ones while price is going down or up, it doesn't really do you a whole lot of good, in my opinion. But where we're at right now, there's a lot of confluence on the fib side of things. If you draw the fib retracement from this move, 618 is the golden ratio, and that's literally right where we're at right now. That's where price is trying to hold and is currently holding. I could see us bounce to the top of this channel again. Bounce to the top of the channel, maybe get another retrace to the bottom of the channel. But hopefully we can stay above this 6,000 support right here. I'm remaining bullish until price falls below this, in which case I'll have to reevaluate my positions. But yeah, in this video I mainly wanted to go over this video. It's 40 minutes long, but if you got the time, it's absolutely amazing. Go to Bloomberg, the outlook for Bitcoin in light of Brexit, global trade tensions, and geopolitical uncertainty. They go over a lot more. I just showed you 5 minutes of it. It's a great video. It helps you just understand why people, why big hedge funds and why asset managers are allocating some of their assets to Bitcoin. So that's all I got for today. I'll catch you guys in the next one. Have a good weekend. I'll see you later. Peace.